All right, in today's video, we are talking about gold. We're talking about silver. Is there really a shortage? We saw that conversation start to develop during the silver squeeze, and the price has actually went down slightly since then. And so there are people that aren't super familiar with the market that are saying, well, is this really a narrative? And so today, to discuss that topic, we have Ken Lewis. Ken is the CEO of ApeMex, and he's also in the original headquarters of the Federal Reserve, where they, used to do their dealings and have their precious metals there. And so a funny story. So make sure you hit the like button on this side right over there, this side right over there. Give us your price prediction for silver in 2021. And good to see you, Ken.
Hey, thanks, Jake, for the time, man. And yeah, it's unique. I mean, we've been here about 11 years now. So formal Federal Reserve building, we got the entire thing. We got the original vaults. We got vault doors from 1923. They're about that wide. We've got 3-foot walls for our vaults. It's crazy. It's great to see us be able to return the building to its original roots and do what it was really meant to be, right?
So do you think that the Federal Reserve has the gold that they say that they have? I have to ask that, being that you're in the building. I know that you thought about this stuff.
Yeah, look, I would generally say yes. I think frankly, people don't realize, countries consume a lot of metal that kind of back up currencies and other things from a reserve standpoint. And I do believe, look, I got to see, at least at West Point and some other locations, a significant amount of gold and silver that we'd all be amazed by. I've never been, actually where they hold the big stockpile, but I think it's there. I really do. I'm not, like, I have my doubts about whether GLD has all the metal sitting there. But I think the Federal Reserve and what they come out and state and all the different countries around the world, they take a pretty significant position in gold to kind of help back up their currencies. It's been common.
All right. So being in the gold industry, I've got to imagine it's a little awkward in that when the market is doing really good and sales are off the chart, sometimes there's a lag between the price reflecting that. So tell me a little bit about that and what's going on right now.
Well, look, I think there's a couple things when you talk about pricing, right? There's the spot price that consumers see, kind of what gold and silver is trading at on the futures markets, to kind of give you a feel for that price. That tends to be, a lot of macroeconomic events drive that price. Supply and demand. It's like on silver, for example, industrial supply and demand, mining capacity. There's a lot of things that kind of go into that. The premium people pay for physical, for example, though, that's a little more volatile, right? That's driven almost as much about supply and demand as it is about, whether gold or silver is worth a certain price. So it does lag at times. For example, we're really tight on metal right now, and premiums are fairly high. If premiums are high, you'd wonder, why is the metal price not going up? And I think it's kind of, frankly, it stumps me at times. I don't understand where, if demand's really high for metal, normally that means a higher price. But there are market dynamics out there. Some would argue that kind of the banks have certain positions and certain future positions, and they're shorting the market in certain places, that maybe the price is not always reflective of true demand. But the other side of it too is needs of metal vary greatly, whether it's investment or institutional or manufacturing or other things. So sometimes you have a lag also in terms of how the metal's being used. We personally believe, from our standpoint, that demand's been high. The data doesn't lie. The demand's been high for a good 18 months now for precious metals. We don't see it slowing down. We were just looking at our week last week, really strong revenue week for us, really strong demand. Premiums are staying very high right now. So that tells me consumers think metals are not a place to be, not a bad place to be right now. Will the price ultimately go up? Hard to say. We always view it as it's a great diversification strategy. So whether it goes up or it goes down, holding metals not a bad concept to have in your portfolio. Just go back to years like 2008, when the equities markets plummeted, metals did very well. So it's a good diversification strategy is what we always view it. So if price goes up or it goes down, not as relevant to me as much as it's about your broader strategy and how you're investing.
Yeah, a moment ago you talked about GLD, which, of course, is kind of the main player in supposedly having so much metals. Now, a lot of times when people are traditionally investing in mainstream tech equities, and then they start to see this type of trillions of dollars being rattled off, maybe it wakes them up a little where they say, oh man, maybe you're supposed to have that stuff called gold. And so the result of that is oftentimes they simply get exposure to the price of it. And in many instances, they may not even realize when they're buying GLD, they actually aren't really getting any gold or silver at all. Now, when you're dealing with physical and I'm dealing with physical, personally, I look at it like this is my savings outside of the banking system. I don't even look at my physical silver or gold like an investment. But tell me about the differences in how you think people approach it, the wrong ways they think that you approach it, and what did you think about my take on that?
Yeah, I mean, I do think people own physical for different reasons. The whole concept of being off the grid, if you don't own it if you don't hold it, concepts are very valid, right? It's not a bad place to have a kind of a safety spot, if you will, knowing it's always there. I also think people look at gold and silver and they look at it from a long-term standpoint. They don't look at it as a short-term investment. They're not buying for, to make a quick buck and sell it 2-3 months later. So I think the forward look is a little bit longer. So holding physical when you have a longer term view is not a bad strategy. I also think people tend to look at, do I hold dollars or do I hold like a precious metal? Because sometimes they look at dollars as a safety valve as well. And look, anyone knows what inflation's done to the dollar, right? But since 1990, I think it's down over 50%. The value of the dollar is, while precious metals are up 6x. Considered a safe haven investment. And generally does keep up with the times per se. And so I think people also look at that as, do I hold dollars, do I hold metal, and kind of go down that path. Look, I think some people also look at, inheritance, and they think about how to pass on their wealth to others down the road. I think that affects a lot of demand for precious metals. It's a great place to kind of put an asset and it not necessarily be overly visible. And I know there's some people who take that concept as well. So, we're a big believer. You should always deal in an investment that's physically backed by metal. GLDs and SLVs, I would go a PSLV route if I was going to do an ETF, not an SLV route, because I want to know the metal's really there. We have a product called One Gold, which is our attempt at an ETF, but you have title, you can do redemption in a matter of minutes, you can trade right on your phone on an app, but the physical doesn't have to come to your house. We hold it for you. And we provide an audit and verify that those metals are really there. And I think concepts like that are going to become more and more popular. We also have to remember, if you want to drive the price of metal up over time, taking physical off the shelf is not a bad idea. If it's just there on paper, you're really not driving. You're not doing your part to drive up the price of metal, many would argue, because holding physical does have a bigger impact on supply and demand over the long term.
So how scarce is the silver market right now? Is it not? There was a silver squeeze conversation. There were a lot of big retail bullion dealers that, went on the news and they said, hey, look, we're seeing record movements and we just quite frankly don't have any. And then there's the conversation about the growing tech crunch that, there's 760 million ounces mined of silver a year, 70% goes to industrial, 30 to retail. So if that 30 to retail goes to 40, what is the impact on that, and what's going on that market?
Yeah, look, the silver squeeze weekend, we had to shut down trading in silver, right? We actually, the way our business works, by the way, if anyone's not aware, we sell physical metal, but we also cover ourselves on the future side. So we don't really make money on the price of metal. So when we go into a weekend, we take a position of how much metal we think we're going to sell. If we go beyond that, we're now exposed to the markets. And we were in a very unique situation. We've never seen demand like that in a weekend. We finally had a risk appetite up to a certain number. And we finally had to say, I can't take any more risk. It worked out. I mean, I think at the end of the day, I believe on silver, we lost, I think it was 15, 20 cents as we lost an ounce. I think it was $1.15 an ounce we lost on every ounce we sold over and above our position. But we can handle that because premiums that had been at high enough levels offset the loss there. So I bring that up only because, when you talk about a silver squeeze and can metal really be taken off the shelf where we drives the price up, I think my answer always is, over the long term, I think the answer is yes. There's a lot of silver above ground sitting in a lot of different places right now. And they can deliver that metal to the exchanges over time. They can do that. And so I don't think you can make a push on silver to where you're going to drive the price up in a matter of 30 days. I just think it's impossible. The volume is just too great to do that. Now, when we look at our demand and we look where silver's done, it has driven the availability of retail consumable product. It's really, really tight. And as a result, I'm paying a lot more to get that product, and I'm charging a lot more for that product. And honestly, it frustrates me that the premiums are as high as they are, because that's not our goal. Our goal is to be able to put as much metal in people's hands as possible. And unfortunately, the premiums have just got to be so high because supply is just not there. So the quick answer is 1,000-ounce bars. You can get those right now pretty readily. Grain, a little harder to get than 1,000-ounce bars, but you can still get it. You want a finished good product that's been minted, it's really, really tight right now. I mean, we're 6 to 8 weeks out on production silver right now that we want to sell to our customers. 6 to 8 weeks out.
Wow.
And paying the price we're paying today is about 6x what I paid per ounce last year.
Wow.
So the premiums are up, the availability is tight. The supply assortment is also harder to get. You want variety. We're a retailer. We have 30,000 products on our website. We can't carry the variety because we just can't get it from different players out there. The other thing that's interesting is when we talk about supply and demand is there's always this back channel where people sell metal. And we're seeing people hold on to the metal this year. Last year, we saw a lot of people selling metal back and buying metal. This year, the selling back has really dried up pretty significantly compared to this time last year and the volumes we were doing with consumers. So I think consumers are saying, I want to hold on to the metal. I don't want to sell it back to you. That's tightening up retail supply. I can't get mints to keep up with volumes. That's tightening up supply. But the silver to make the product, they can still get that pretty readily right now.
Do you think that there ever will be a legitimate squeeze on silver, whether that's in 2 years, 5 years, 10 years? They made a lot of estimates about the amount of growth of the supply needed in tech and EV, and there's all these mandates they're making about EV. And to me, I feel like one of the only options that governments have left, especially these major Western ones, due to the hole they put themselves in from these lockdowns, is basically going to be, they're going to have to do so many iterations of infrastructure and they're bailouts, but they can't announce them as bailouts anymore. And I think they've got to call it infrastructure, and it will, distract people from what's happening. And it seems like that's just going to go heavy into EV, solar, and there's a lot of silver that's needed for that. Could there ever be an impact down the road that causes a real squeeze that affects the price in a serious way, that does bring it up to these types of triple-digit numbers that some have suggested could occur?
I don't think there's any doubt that silver's underpriced right now. When you just think about, the GDP growth we're talking about, the investment from our country in different areas, when you think about the printing of the debt that our government's doing and the views on inflation and real interest rates and where those are at, it's frankly undervalued in many, many ways. When you think about the future, I mean, EV and some of these consumers of silver, we got to remember, silver is generally not mined just for silver. It tends to be a byproduct. It tends to be something that's very expensive to bring out of the ground, from my understanding at least. And I'm not an expert in this area, so if others want to chime in and tell me I'm wrong, they're more than welcome. But from my understanding is, it's not as economical to mine silver at these prices as it could be at much higher prices. How much silver is available in the ground? I'm not an expert in that area either. But my general view is mining capacity is not going to be able to keep up with demand over the long term, especially as we start seeing more and more uses institutional. I just think it's impossible. Look, mining volumes are down. I think it's the 10-year low in terms of ounces coming out of the ground. And we're talking about those numbers at that level, and we're doing $25 silver when we were at $13 silver a year ago, and they're still not massively growing. Why? Because the capital needs to mine silver are huge. They're massive. So I'd be surprised if we don't. We'll have a squeeze and run out of silver. I don't know if that will happen. Will the price of silver move upward just because of the overall demand outstripping supply? I absolutely think that could be a real world possibility.
So where do you see the price of silver being at the end of this decade if these movements in infrastructure and EV, et cetera, continue? There's been some projections by, who knows if you can believe the data, but by places like World Bank saying there's going to be a multi-100% increase in the amount of demand for silver. Where do you think it could go?
Look, I don't know. My personal opinion is it will be higher. What number is hard to say. I look at it kind of like this. It should be 2 to 3 times higher over the course of time, just because the demand dictates that. The problem we've got in the silver markets, and it really became evident a little bit with the silver squeeze weekend. We have a lot of exposure on the future side. And then when we went out there and saw this big movement, what did they do? They raised my margin calls. Mm-hmm. Right. And what people don't realize is they raised the margin calls like 14%, but a lot of us go through third parties. They raised theirs 100%.
Wow.
So my margin call went up 100%.
Whoa.
I had to write a $4 million check for margin literally the next day. And I bring it up because my point is, and I want to be careful, I'm not a conspiracy theorist here, but I think the price of metal, there's some levers that people can pull that can keep that price down. And I think our banks and our systems allow the price of metal sometimes not to reflect what it truly should be at. That's my quick way of saying it without being a conspiracy theorist. But I do believe at times metal's not reflective of its true value. And I think we're in that time right now. I mean, just think about it. When they did that margin call, what did silver do within 24 hours of that? Dropped to $1.50.
Yeah.
Dropped to $1.50. And why did that happen? Well, because they thought people weren't going to cover. I mean, you start drilling into it. And again, I'm not an expert in that space, but you start to drill into it. You just realize the different levers that institutions have that can affect what the price of metal's doing. So I'm kind of telling you that I don't know that the markets are going to let it go to levels it probably should be at. Should it be higher? Absolutely. What's the limit on that? I really couldn't tell you. I think over time, if we can see a continued use on the industrial side, the capital requirements to mine it are going to always be a challenge, in my opinion. It should definitely go up 2, 3, 4x over the course of time, you would hope.
Wow. So I've heard, of course, many times, and I remember the announcement of the margin call increases, and then you watch it go down 5% right after. But that's very interesting that you said that since you go through an intermediary, then that intermediary that doesn't make a press release like the London Exchange and the rest of them do. So me and retail investors didn't even hear about that.
Yeah, well, you actually think about it, and I don't know the name of the companies exactly, but when the GameStop situation happened, you started to learn a little bit more about the different players involved in that process. And there's layers, right? There's layers of companies involved. And as you get further away from GameStop, the risk potentially gets higher and higher. And so I think people have to then caution their bets. So at that time, I think they limited the size of transactions. They limited the amount of exposure. Well, doing margin calls is exactly the same concept. You're trying to make sure people are being careful, make sure they have the financial wherewithal to support the steps they're taking. And with the volumes exploding like they did, that was a short-term reaction. Over the long term, you would hope that wouldn't be the case, that they wouldn't have those requirements over the long term. But it just showed you the levers that were available is really my point, that banks have, whether that's putting more metal on the markets, pulling metals off. I mean, there's some stockpiles out there by the JP Morgans of the world that are huge. And let's not kid ourselves. There's been many people out there in the industries that have gone to jail for price manipulation in the markets. And so my hope is over the course of time, with more visibility, I think this stuff gets solved. I think the government can do good in this space by looking into the regulatory requirements, looking into the way things are done, and making sure the end consumer is protected. in the long run. So I'm actually very hopeful the visibility that was put out there is only going to bring improvements down the road. That's going to maybe let metal really truly perform the way it should.
Interesting. So tell me when you're looking right now at the world and, you're huge, big company, big time successful business person. And there's a lot of people that have been screwed over, like it's, the reason that I try to watch my criticism of lockdowns in depth for the sake of the algorithm. But the reason I am so upset about it is because the UN said 200 million people were going to be pushed into poverty back in like July. And then you look at the number of people in America they can't pay their rent or their mortgage, but they're not 1 month behind. They're 12 months behind now. And a lot of people are in a really bad place. Globally, probably it's affected way more than the hundreds of millions that the UN estimated. But there's a lot of people saying, hey, look, I've got to screw my head back on and I got to figure out how to grow this new business, grow this side project, get my income up, take care of myself, my family. I got pushed out of this job. Here's my new business. What do we do? Like for someone who's a very successful business person, what do you think are important things for one in a position where they're looking to, grow their dream?
Yeah. I'll tell you, I've always had a lot of respect for our founder of our company, a guy named Scott Thomas, been in business a little over 20 years. And I think the principles with which he built this business hold true, whether it's in good or bad times, right? His story, by the way, is he inherited a collection from his grandfather and he started selling some of that product on eBay. And he realized that maybe this business got a bigger opportunity. And then he invested in his business, and kind of brought in talent, brought in systems, took this thing online, and the rest is history. Great American story. And nobody works harder than Scott Thomas. Nobody wants his company to be successful more than Scott Thomas. He's willing to roll his sleeves up and do anything it takes to be successful. And I think those are attributes. A guy like me back in the day, I never dreamed of working for myself. I was a risk adverse guy, worked in corporate America most of my life. And it opened my eyes what it takes to build a business. It takes work effort. It takes persistence. It takes, when you get beat down, you got to get back up and you got to go at it again and not get frustrated by it and keep trying to get better. We have a little thing here at APMEX where we talk about never rest on your laurels. Always look to get better. Always. There's always opportunities to improve. No matter who you are, no matter what we do, there's always a little bit we can do better. And if you maintain that mentality about constantly improving, constantly innovating, constantly looking for ways to bring value, you're going to be successful. Now, are you selling, tennis shoes or precious metals or doing a software as a service or anything like that? You can sometimes pick the wrong industry or the wrong concept. But man, I'll tell you what, nothing replaces, having a plan, sticking to it, working hard. Don't let yourself get down. Be creative, be resourceful. And I think that's really the story of APMEX. I mean, we'll probably last year we did $1.8 billion in revenue, $1.9 billion in revenue. And that's from one guy owns this company. He still owns it 100%. It's something that I think people can be inspired by and really know that it doesn't happen. I have a son, he's 22 years old. And I always like to say, he's trying to figure out who he wants to be. And he's made a decision. He wants to be a teacher. Okay, when dad first heard that, he kind of freaked out because it's like, how are you going to support yourself? But I realized what he really loved doing was he loved dealing in band T-shirts and collectibles. And my point I'm bringing up is his passion and his desire in that area. I know one day that's going to take over and that will be his focus. But having a passion and having a desire, that's what it's about. You got to really, really believe in what you're doing. And if you believe in it, I think you can make it successful no matter what happens. And I think it's great to see people have passion for things and really pursue those passions. Because so many people like myself, I worked for corporate America and I kind of did, I had value and I think I got better over time. But I didn't take the risk. I didn't put myself out there to the level that others did. And I always have admiration for those people.
So first of all, congratulations. That's fantastic. Fantastic news, fantastic success, and just great in general for those of us invested in gold and silver. So final question, what would you say is the best financial advice, either that for yourself, that you're giving to your kids, that you think is important?
Yeah, I got twin sons. And so my other son graduating from Georgia Tech, chemical engineering degree here in about 2 months. Dad's excited about that.
Congrats.
We actually sat down and had this conversation because Dad's trying to help. Dad's trying to see where I can, use my experiences and assist him. And I tell you, I think a lot of it is about starting young. I think a lot of it is about staying persistent with your investments and not getting frustrated and getting down. I think a lot of it's about thinking long-term in your investments. Look, I think you have to have a plan. It's not going to take care of itself. Him and I were doing the math. We all have done it with compounding interest, but I'm showing them at 22. If you do this, here's what you have when you retire. You start at 32. Look how the numbers changed. So start young, have a plan, be persistent about your efforts there. Don't try to pick the game winner. So one of the things we talked about is, okay, Dad, I want to go buy this stock and that stock. I said, buy ETFs and then buy them in different industries and diversify your investments out of the gates because you don't know enough at this stage. You don't know what's going to work. You don't understand how to read the balance sheets and really have the education level to go and pick a perfect stock. Try to diversify yourself out. It's worked very well for him. My biggest thing was I wanted to see him make money in that first year. And now that he's making money and he shows that his investment's gone up, he's even more excited about researching and learning and looking for kind of the areas that might be undervalued. And this is a kid who's 22 years old. And I tell that story because I think it's good advice for anybody is to start young, diversify. Okay. Even at a young age, don't try to pick the winning stock. Go out and buy 5 stocks. I'll give you an example. I bought airlines a year ago. It's turned out to be a really good investment, by the way. But I didn't buy Delta only. I bought Delta. I bought like 4 airlines. Why? I don't know. Operations of them, the capital structure, or things that are above my head. I knew I like airlines in this sector. I didn't want to be tied to one player. Let me go the route of investing in 3 or 4. And what do you know? It's worked out pretty good for me. So I think that concept of don't put all your eggs in one basket is great advice also when you're young and you're looking to kind of grow your nest egg. You really need to think a little bit about it. And putting thought into the front end saves you a lot of time and effort on the long run. If you just take the time to spend and get educated. I will say this, and I know we're probably over on time. I think the gold and silver buyers we're getting into the business today are so much more educated than the gold and silver buyers from 2 years ago. People are taking control of their investments. They're getting educated. People don't realize gold is the second best performing asset class since the year 2000 outside of real estate. They're knowing that. They're researching. They're doing the numbers, and now they're figuring out how to get into the space. And again, I bring it back to gold and silver. I would never recommend you put all your money into gold and silver either, especially at a young age. But having an exposure to it makes a lot of sense as well.
Ken Lewis, thank you so much. Final question is, what's your favorite coin?
What's my favorite coin? I got to go with the American Eagle, man. I mean, as much as it's frustrating to get them from the U.S. Mint right now, I think it's the most beautiful coin. By the way, most people don't know this, but they're redesigning they're going to make it a different coin in July. So a new design's coming out. So 25 years of the designs going bye-bye. Great coin, and I think it will be around forever, and you're backed by the U.S. government, which is still the best government in the world, no matter what anyone says out there. That's the coin I would go with.
Man, that might be a collectible then, the Eagles in a couple hundred years. So
there you go.
So for everyone listening, make sure you hit the like button on this side right over there or that side. Send this out to more people if you enjoyed this video. Want to thank Ken for coming on. If I missed any important questions that you love to see, leave them in the comments right there down below, and we'll be sure to have them next time we have Ken back on. So let us know if you enjoyed this, if you want to see Ken back on. And thanks for joining.
Thanks, buddy.